I grew my account 1% a day for a whole month. And you guys can see we made about 4 grand on a $20,000 account. That's about 20% in a month. And I'm not only going to show you the proof, but I'm also going to dive in the charts and show you step by step the scalping strategy I use to grow this account. I'm going to show you the trading rules I set for myself to grow this account so you can use them as well. I'm going to show you how I would use the strategy to pass a funded account, and also give you a checklist at the very end of the video so you can walk away from this video knowing exactly how to enter and exit for every single trade, the same way I did to grow this account 1% a day. But before we get into that, I first want to show you guys the proof that I actually did grow this account, and I'm going to show you my broker statements in a second. But first, just by looking at MetaTrader 5, this is a live cash account. You can see made about $4,000. I'm just going to walk through the trades here. Very, very consistent. Every time you see a red little profit there, it just means corrections, which actually means commissions. Okay, so you can see it says synchronization. That is just the commissions. But overall, I didn't take any losses on this account, which sounds insane. And I'm going to walk you through everything here in just a second. All right, so you guys can see I'm logged into my broker account. I don't want to spend too much time on this. I really want to get into the meat of actually trading this, but I do want to show you guys the proof that I actually did this. So I'm just going to pick a random day. We can go April 30th. I can click view. Now I'm going to scroll down to the bottom so you guys don't see my last name. Zoom in here a little bit. Makes it really easy for you guys to see. And you can see this day I made about $325, okay? Now I can go ahead and go through this one by one if you really want me to. I'm just going to pick a few more. So let's go April 25th. I'm going to go ahead and zoom in down here. You can see this account. Let's see, we're at like 22,000. We made about $435 on the day. Okay, so we actually did a little bit more than 1% a day, and we're going to get into that in a second. You guys see, I can go on and on. Okay, I'm going to go ahead and just pick another one to when I first started this, which I believe was on the 18th. Let me go ahead and check. If I zoom in, you guys can see the actual broker statement. I go like this. So you guys can see the account was about $20,790. Looks like I started a few days before this. And on that day, I made about $245. So we actually did a little more than 1%. Not bad. We're going to walk you through everything. But first, let's get into the charts and go step by step exactly the strategy I used to grow this account so you guys can do the same. Okay, so the strategy for trading this was very, very simple. I like to keep it extremely simple, step by step, just so I know I don't have anything too complicated. It makes it really easy. But what I did was trading supply and demand. Now, you guys have probably seen supply and demand from myself. Maybe you haven't, but I'm going to give you guys a quick overview and then also give you guys a free kind of guide on how to get more in depth on it if you want that in the future. But for now, all I was trading was simply supply and demand zones on the 1-minute chart, only on NASDAQ futures. Okay, I didn't touch any other indice, didn't touch any other futures. I only traded NASDAQ, and I only traded off the 1-minute chart. Okay, made things really easy, really simple. No indicators, just price and just volume, and that was all I used. And so a great example of a trade that I would take is right off this demand zone here, right? So I can see that this is actually called a rally-based rally demand zone right here. Okay, and all of supply and demand is based off this, right? You want to see a fast move higher, consolidation, 1 or 2 candles, and then another fast move higher after it. And that little consolidation period is actually where that demand zone is going to lie. You can kind of draw this candle or this area as a little zone. And so when price ends up coming back to this area, that's where you want to buy. That's where you want to buy so you can take a bounce off of to move higher. And so to give you guys a quick example of how this would work on the trade like this, what I would do is simply this. I would wait for price to form a demand zone here. You can see you have a nice move higher, 1 candle of consolidation, another fast move higher. Price would come down. I would draw my demand zone from the top to the bottom of that demand zone, and then boom, price would come inside here. I would get long, and I would take profit around here. Now, how did I actually decide where to get in, where to get out? Well, again, with demand zones, I would simply get in right at that demand zone, okay? So I would get in right as price comes down to this demand, and the stop loss is actually different. See, a lot of times when I trade supply and demand normally, I would want to put my stop loss right below the low of this demand zone. But based off the nature of how I was trading the system, I wanted to make it really, really easy. So I made a rule for myself to only set 5-point stop loss and 5-point targets. So I would go for 1-to-1 risk rewards every single trade, and I would go for 5 points every single trade. It made it really, really simple and really, really easy. And the reason I did this because I knew that NASDAQ especially can move 5 points in the first 1 or 2 minutes. So it'd be very fast in and out scalping. And I knew that was a very good range that NASDAQ could hit within a minute or two. So I'd come down here like this. I would set my stop loss at about 5 points, which would be right around there. So about 1833. And I would take profit again at 5 points, which would be right around here. Okay, so I just go for simple 1-to-1s. A lot of these trades happen extremely quickly. Okay, they would be sometimes within a few seconds, usually within the first minute or two. It was very, very quick. Okay, and what I would do is just set OCOs. So I'd get in, set my stop, set my target, and then just let the trade do its thing. If I get stopped out, I get stopped out. If not, then great. but it's very, very simple process. Okay, all I did was trade supply and demand zones on the 1 minute chart using this and going for 5 points. Now, later in the video, I'm going to show you guys more in depth on the actual trading rules I use, but I first want to go over some of the actual like steps and things I look for when it comes to trading these demand zones. Because if I'm being honest, you can look around and there's going to be a lot of these supply and demand zones that form throughout the day. So how do I know which one to take? Do I take this one up here? Do I take this one down here? And a few things I want to talk about in this video are going to be that. And so what we're going to start with is the number one thing I look for when trading supply and demand, which is going to be trend. Okay. Trend is extremely, extremely important. The way that I go about trend with supply and demand is like this. When I am looking at supply and demand, if I'm going to be bullish, I want to see price in an uptrend. Now, when I'm looking at the 1 minute chart, it can sometimes get a little complicated, right? Sometimes you may see really fast moves down, then back up, then back down. It can get very, very complicated very fast. And so I'll tend to just zoom out a little bit and say, what is the overall trend on a higher time frame? And when I say higher time frame, I don't necessarily mean going from a 1 minute to a 5 minute. I mean just zooming out. So keeping on the 1 minute chart, but just zoom out a little bit like this, okay? And I decide to say, okay, what is the actual trend on this kind of time frame if I zoom out, as opposed to the mini time frame, and I want to see them aligned. Okay, so I want to zoom out and be able to see that, hey, we are in a uptrend, and on the smaller time frame, we are also in an uptrend. And if I can see that occur, then I know for sure that my odds of this trade working out goes up exponentially. And so that's one of the things I would want to do is only stick to trades that are in an uptrend. So you can see, for example, in the beginning half, before the market even opened, price was in a downtrend. We're heading lower, we're going straight down, right? But later on throughout the day, I noticed that price found a bottom, we made a high, we made a low, and we made a new high. And so at this point in time, right around here, I knew that we were finally in an uptrend and I could actually look to scalp in a demand zone, okay? Because when price breaks this and we're now in an uptrend, I don't necessarily want to be shorting at supply, okay? You can see I could have drawn a few different supply zones in this area, like right here, and I would have gotten stopped out. I would have got stopped out there, would have got stopped out here, right? There's a lot of places where you would have got stopped out because the trend is going up. And it's really important that you want to make sure you're staying aligned with the higher time frame trend. Now, another example of this would just be later in the day. So you guys can see that obviously if we're just looking at this price action right here, we're in a pretty, major downtrend, right? We're just going lower, 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 lower highs, lower lows. And so you may be thinking, when price comes back up to this area of supply up here, or maybe all the way up here, wouldn't we look to be shorting at these areas? And the answer for me would be no. Why? Because you'll want to zoom out and look at the higher time frame trend, right? So if we zoom out a little bit, I get rid of some of these drawings, you can see that we're still in an uptrend, right? Price has went from this low back here up to this high, then made a new low, and then made a higher high. So we're making higher highs and higher lows. So what I want to do is simply just not trade through any of this downtrend. You simply want to avoid trading in this area and wait for price to make an uptrend again, right? So you can see we wait for price to tell us that it wants to move higher, and it does that by moving higher highs and higher lows. And then we wait for an opportunity to get in. So one example I would have taken is that if price is moving up here and we know that we have a strong demand zone down here, we'd want to look to get long off this opportunity. Now you could say, Jordan, if you're only going for five points, you would have missed a huge move here. And yes, I would have missed a huge move, but listen, I'm going for base hits. I just want to try scalping, going for base hits, simple 5 points, can be easily done on NASDAQ, and trading off these high quality zones in a higher time frame alignment makes it very, very easy to hit these consistently. Now, going through all these different supply and demand zones can take a very long time. And so what I've done to make it easier is I've made a full course breaking down supply and demand. I'm going to leave a link to that in the description. It's 100% free. So feel free to check that out after the video if you want more instructions on how to trade these supply and demand zones. But next, what I want to talk about is the actual rules I use to trade this account, because it's very, very important when it comes to how I was able to have such a high win rate trading this and be doing it consistently at 1% a day. Okay, so I had a list of very simple trading rules that I used throughout this account. And these were the rules that honestly made it very easy for me to grow this account consistently. And so the first one I had was to only trade between 10:30 a.m. Eastern and 3 p.m. Eastern, which is kind of a weird rule, but I made it a rule for myself to not trade the first hour of the market being open. Now, for those that know me, or maybe you don't know me, but I almost always only trade the first hour of market open for my normal strategies. And for this one, I made it a rule not to trade the first hour at all, which is a little bit different, but I want to explain why. So what I noticed with NASDAQ is that in the first hour, it's typically very volatile. It's very up and down, very back and forth. And I found that NASDAQ doesn't respect supply and demand zones the same way it does in the first hour compared to later in the day. You can see even right here, market opens at 9:30 and it just goes straight down, right? We disregard any of these demand zones down here. And then you can see we have a few supply zones on the way back up and we just disregard them as well. We just go straight up and through them. And so by making it a rule to say, I'm going to wait for the first hour to pass and let the price action just be a little bit more choppy, it made it a lot easier. Because choppy price action is kind of what you want when you're scalping just a few points. If I'm scalping 5 points and price keeps going up and down, it's going to be very easy to just sell the highs and buy the lows. But if price is just ripping up and down like this, it's very tough to know if my demand zone or supply zone is going to hold and if that's actually going to work. So I made it a rule for myself to not trade the first hour, and that was a huge point of success that allowed me to grow this account. Now, the next rule I had was that I was going to stop trading when 1% of the account is hit. And that was the whole reason for this account challenge in the first place, was that I want to see if I can grow my account 1% a day, and that's it. So what I would do is I would go for base hits. On a 20K account, 1% is $200. And if I'm trading NASDAQ futures, I only needed 10 points to do that. So 2 trades would essentially get me to my 1% account, and then that would be it. And what this made me do, along with number 4, which I'll talk about in a second, which is taking 2 to 3 trades a day max, allowed me to only stick to the highest quality zones. Because I showed you guys earlier, there are so many different supply and demand zones you can trade, and I wanted to stick to the highest quality zones possible. And so by saying, okay, once I get to 1%, I'm going to stop trading, and also saying that's about 2 to 3 trades a day max, it made it really easy for me to only stick to the highest quality zones and not get caught up trading in all the different chop. And the last rule I made for myself was simply just to check the news and don't trade any news events. Because honestly, trading news, trading FOMC is just a gamble. And I wanted to make myself clear when I was trading this to make sure that I'm not going to get lucky in these trades. I'm going to stick to high probability setups, and that is it. And it's going to make me money, great. If not, we'll figure it out then. By getting out of all the lucky and crazy news events, I just said, okay, we're just going to wait. And after 10:30, if there's no news and it's a good setup, I'm going to take it. And that is it. 1 to 2 trades a day, 2 to 3 a day, 1% account, and that was it. I would be very, very disciplined, and that's a huge reason why I was successful with this account. Now, I didn't do this on a funded account, okay? I did it on a live margin account with $20,000 in it. I understand not all of you guys have $20,000, so I want to show you how I would do this on a funded account to pass it and how to consistently grow it there as well. Now, when it comes to a funded account, the strategy would actually be the same. And really the only thing you need to tweak is the risk management side and how many contracts you're taking. The main rule I would set for myself going through this is that I would want to risk 10% of my max drawdown per trade. And the reason I would do that is because essentially for me to blow up this account, I would need to lose 10 trades in a row, which statistically trading supply and demand based off the checklist I'll show you later in the video is very, very tough to do. It's almost impossible to lose 10 trades in a row. Still possible, but very, very tough. So what I would do is make it like this, so it's almost impossible for me to blow up the account and then just grow consistently over time. And so an example I can give you to pass a funded account is, by the way, I am not, affiliated with any funded accounts. You're not going to see any affiliate links for me, okay? They're all your own. If you want to go and try them out, I don't really use them that much. What you could do is, let's say you have a $300K account, okay? Let's say you have a $20,000 profit goal and a $7,500 drawdown. Now, what you could do is risk $750 per trade on each trade, okay? And now if you're trading NASDAQ futures, that may mean taking 3 or 4 contracts per trade, maybe even more, 5 or 6 if you're risking 5 points. Now you can do the math to really figure out how many points should I be risking per trade to risk 750. And so you may find that if you're taking 5 or 6 contracts, maybe you only want to risk 3 points. And so you're finding these high quality supply demand zones, risking 3 points and then going for 3 points. Maybe you want to make it a little bit bigger and risk 8 points. So you risk 8 points to go for 8 points, right? What you want to do is figure out the math where your drawdown is, or your each risk per trade is about 10% of your drawdown, and do that for every single trade, because it's going to make it really easy for you to actually pass this account consistently without having to worry about blowing up. Now, the last thing I want to share with you guys is a trading checklist. And what I highly recommend is either screenshotting this or writing this down or doing whatever you can, because this is the exact checklist I use that allowed me to grow this account extremely consistently. I grew from 20K all the way to 24K using this exact checklist. And first thing is high quality supply and demand zones. Now, we already talked about this earlier in the video. And again, what I would recommend is clicking the link in the description. You get access to my free course inside the vault going over supply and demand. So you're going to become a master at it and know exactly what a high quality supply demand zone is. Now, the next thing we talked about is aligned with higher time frame trend. Again, If price is moving higher, you don't want to be shorting at supply zones. Okay, mathematically, it just does not make sense because at some point, supply or demand has to give up and price has to move in a certain direction. So I'd highly recommend only trading bullish in a uptrend and only shorting in a downtrend. It makes a lot more sense and it's going to give you a much higher win rate. Now, the third thing I put on my checklist is going for one-to-one risk-reward trades and quick scalps only. And I did this because I wanted to be very quick in and out. The last thing I wanted to do is go for these crazy risk rewards, risk 3 points to go for 30 points, have a bunch of losses. That's not what I wanted to do. I wanted to go for a high win rate, quick scalp, quick profit strategy, and that's exactly what I did. So I always went for one-on-one risk rewards. Even if price just kept on going and going, I would just take it on the chin, be a man, and get away with it. And it was cool because I was just taking profit, right? There's nothing wrong with taking profit, especially if you have a one-to-one risk reward at a minimum. Now, the next thing I did was, again, only trading after 10:30 Eastern, right? I already showed you guys the checklist. Only trade after 10:30 Eastern, trade when there's no more news, and only NASDAQ futures. I could have done the same with ES futures or gold or a bunch of other stuff, but I wanted to keep it simple. I wanted to focus on just one ticker, one setup, and make it very, very easy for me, right? Doesn't matter how much I'm losing or risking. I'm risking 5 points. I'm going for one setup on one ticker, and it made it very, very easy to grow this account. Now, what I can see is you guys can just scroll through this, and every single time it's red, it's just a synchronization, it's just corrections. I have not had an actual loss on this account. I can go through. We started this account on, April 15th when we added the money in, and then May 6th is when it ended. So not even really a full month, and we grew the account over 20% in less than 20 trading days. So it was at 20K, we grew it to $24,200, and we did that in about 18 trading days, okay? So it was very, very simple, very easy, and I'm not gonna lie and tell you that this is, something I could do for the rest of my life, or this is something that I could do consistently. Having a 100% win rate is not common, okay? I got lucky on this. I do expect to take losses. Statistically, I around have about 60 to 70% win rate on my normal main strategy that I use and that all my students use as well. And so what we found is that I just got pretty lucky with this. And I'd highly recommend that you don't really necessarily expect this kind of results for you if you do attempt the strategy. Because again, 100% win rate is very uncommon. I got lucky with this. But it just so happens to end up working out. And I do think that you can have a very high win rate, 60, 70, maybe even 80, if you're sticking to the checklist in this video. So with that being said, guys, I hope you did enjoy. Go ahead and click the first link in the description below. Okay, I have a free course for you. I actually have 4 courses in there for you for free. We have a whole community. Again, I'm not here to sell you any affiliate links for any funded accounts. That's not what I do. If you want access to that for free, go ahead, click the link. If not, all good. Just leave a like, subscribe if you enjoyed, comment down below other videos I should make, and who knows, maybe I'll go from 100K to 1 million trading 1% a day. We'll see what happens. But other than that, guys, hope you enjoyed. I'll see you all in the next video.